If you can't reach the sky, aim a little lower. Quote of the day, but it's a funny one. It's Friday. Why not? Bitcoin. Let's go off on the weekly chart to start us off and see the argument between the bulls and the bears. Then we'll zoom in up to the daily chart, see if we can spot anything to watch for the next several days going into the weekend. So if you like the video today, give us a thumbs up. If you want more content than what you see here on YouTube, you want help for this next bull run, I'm here to help. Patreon and our private Telegram is through that link, and we're happy to have you there. So let's see what we have today. This week, we indecisive candle so far. We'll see where we close. 2 days, 8 hours. Are we going to close bearish, bullish, or are we going to kind of close like this and be very indecisive? See the wick on the upside and the downside. We've been everywhere. After this bullish up move, though, what is the bullish part? Well, it's right here, right? That's the bullish part, obviously. Now, for the bear argument, I would watch for two things. The bearish would argue that we have not closed above the 200-week EMA, right? That would be a huge line in the sand, around 25K. Also, what do we notice is the 50-week kind of pressing there as well. So maybe like a double net. The bears would also argue that you did not close so far, right? We haven't closed this candle yet, but we have not closed above this high candle, right? That closed at 24,316. Depending on which exchange you look at, that's kind of right where we wicked up to on this weekly candle. So that's the bear argument, right? The bullish argument is like, just, hold my beer and watch this. This is a hell of a move. Broke out through our, multi-month consolidation level that we broke with resistance all the way back at kind of 18.5 to 19K. Cut through that like butter. We're kind of pressing the next resistance level, right? Right at our high here before the big drop, right? This is the FTX week. We broke right through that. We broke through all these moving averages. So the bulls are, here's the evidence, right? So we just don't want to come back down and really take out this level. We're still okay as long as we can maintain price action above here. But for the most bullish, I think we got to really kind of hold our head above this kind of level here. We really need to hold above 21K to remain the most bullish, just based on this breakout, right? So that's where I'm looking at. Other than that, we should not be concerned on the weekly chart. If you want to have more evidence of that, look at the Heikin-Ashi candles, right? That tells you your momentum. And unlike the traditional Japanese candles, these are the Heikin-Ashis. These show the momentum to whatever side the wick you see. So what do we see? The big green candles, which is a big bullish move, just like normal, but the momentum on the upside, huge wick equals huge bullish momentum. The lower wicks equals huge bear momentum, as you can see here. So what do we notice is we have zero bears pulling us back down here. So that is a great sign on the weekly scale that the bulls are still in charge. So having said that, let's go back to here, and we can even look at closing prices, right? We have not closed above this, so if you want to know how to do that, just flip to the closing line price. The line chart will only update. It removes a lot of noise, right? So just a helpful tip there. Let's zoom into the daily, see if we got anything else. We're looking at the EMA 8 in the red, right? To remain super bullish, you want to be holding those upper moving averages. As you can see, back at our initial move off, right into the 200-day EMA, this pink line, ran right into the 8 EMA and then move up again, right? That's what we want to be doing. Now, we did something back in January 30th right here that we hadn't done this whole bullish move up. We closed slightly below the EMA 8. So maybe that was just a warning shot. Maybe it was nothing, right? Maybe we just slipped on the ice and we're going to recover. Or are we going to slip again in a bigger way? Maybe we'll see in the next several days. Could take a couple weeks. This candle right here, notice the sell-off here, right? So we'll see. This is not quite a shooting star. A shooting star candle would have to have closed halfway under this candle. We missed it by just a little bit, so we're still okay. Right, this is a bearish candle, but not the most bearish, right? Shooting stars will be a bigger warning, but so far so good. We want to see where we close today. Love to close above the EMA 8, and that currently is 23.3. If you see on the top left here, it's our EMA ribbon. So that's where we're looking to close above and continue our momentum. If we start to close below, no big deal, right? We're still okay. Even if we close the EMA 14, we're still okay. Even the 21, right? I would argue the trouble could potentially start under if we give away the 200-day EMA again, right? That's all the way down at 21.2, right? That's a good bit of drop. So we would have to go down over the next, whenever, right? 10%. We're looking at a 10% drop to really start to let's take another look around and take a breather, and we'll reevaluate. But until then, the bulls are absolutely in charge, right? So that's what to be looking for next. Now, how about for indicators? Our momentum is dying, right? Our stochastic RSI on the daily, at least, is way down here. Now, could we just pick back up again and do this? Of course, that would be great. We could also just fumble around and stay down here. Have we done that recently? Well, not recently, but going back to August 2022, right? We tried to get above it, didn't last too long. So usually, right, we come down and then we just kind of come out of it. But, we could stay down here for several days. What would that mean? Well, that would likely mean that the bears are gaining momentum. The bulls are losing momentum. So we want to keep an eye on that. The RSI losing strength, but still bullish, right? We're back down here after, the big move up, but we're starting to form some divergence, some bearish divergence. What does that mean? Well, the price is going up. The indicator is going down, right? Usually, sooner than later, you're about to do the opposite. Whatever the indicator is showing, right, that's usually where you're going. The MFI, what's the difference between the MFI and the RSI? The MFI adds volume in there, so that's a good one. If you don't using that, I would probably add that to your toolkit. Another positive, the ADX and DI, right? Look at the ADX, the strength, the orange line, right? We're still looking good. The bulls are in charge. That's the DI positive in the green, right? Whoever's on top, you can think of it as bulls and bears, right? So we're showing still signs of power there. So good all around so far. How about we look at these indicators on the weekly, see if there's any difference. The Fisher transform is a great one to use on the weekly. Still showing parallel lines running, so that is great. We've taken out all these highs. We've been in a downtrend on this since January of 2021, over 2 years, and that was just broken just about a week or a couple weeks ago, right? So looking good there. That is bullish momentum picking up to the upside, breaking that downtrend. So looking good on the weekly Fisher transform. We've still got momentum cranked out on the weekly stochastic. Quite the opposite. We have bullish divergence playing out on the MFI for the price, right? Prices were going down for months, right? And then we all of a sudden got this uptrend, right? This is why, right? Look at this. Look at the downtrend from, back in June to October, and then look at your MFI from like June to October, right? June to October, we were going up in the MFI. That's bullish divergence, and MFI is great for divergence. So we're watching for that. All right, so I'll keep it kind of short and sweet for the weekend. You know what to be watching for how about we zoom into the 4 hour if you're really wanting to know kind of when to maybe get your panic boots on. Well, just I would look at your 4 hour chart and then just make it simple, right? I would just keep it at some kind of a zone, right? Until we're below here in closing. And how do you know to make it easy for closing? Just put on your line chart, and there you go, right? If we close under 22.5, that would also be the 100 EMA right here in the blue. Then we can start to get a little bit more concerned, at least on the 4 hour chart. Not saying anything catastrophic's coming, but 22.5 for the 4 hour chart, that would let us zoom out again to the daily, the 3-day, the weekly, and take a look at what else is going on, right? So that's kind of my summary going into the weekend. Hopefully you enjoyed. Thumbs up if you haven't already. Follow us again on Twitter, Telegram, Patreon. Love to help you out there as well. Let's get to the car of the day. My favorite car in world history. If there's one car on the planet, money's no object, I would still be picking this one first. I love Koenigsegg's and Pagani's and all the hypercars, but this has still been my dream car ever since it came out. It's $4 to $5 million, so it's no slouch, but the Lamborghini Centenario Roadster, right? That's it. I actually have a model right there of this exact one. Absolutely my favorite. The rear end is second to none. I don't know how you beat that on any car ever. Those fins and that diffuser is all carbon. The whole damn car is carbon fiber. But yeah, that's number one. I think some of you longtime subscribers may have known that, but if you don't know, now you know. That's my number one car on the planet Earth. No price necessary. Anything else? All right, I'll end it there. Thanks so much for watching as long as you have. I appreciate you, and I'll see you real soon.